The cryptocurrency market is surging as new investors take up positions in the innovative field. As prices and value go up, virtual asset service providers such as crypto exchanges are building more financial instruments and products to capture the interest of crypto traders. Founded in 2013, Huobi Crypto Exchange is one of the pioneers in offering a wide range of instruments to its users. The exchange has expanded its crypto-focused financial products in the past few years, adding to its vast offerings of digital asset spot trading. Derivative products in the crypto space have ballooned in tandem with the market, and Huobi has been right up there aiming to add as many of these products as possible. Huobi Futures is the derivatives platform of Huobi Group. Ranging from futures, perpetual swaps, and options, Huobi Futures has played its role to make it easier for traders to take up positions betting on the future price. One particular derivative that is witnessing massive adoption across the crypto markets is the perpetual swap, which allows traders to bet on the future price of an asset without a predetermined expiration date. As explained above, a perpetual swap contract is like a futures contract but allows the user to buy or sell the asset at any time without an expiry. In this class of derivatives, users have an option to take up USDT margined or coin margined perpetual swaps, both offering different pros and cons. So how does the USDT margined and coin margined perpetual swaps differ? A USDT margined perpetual swap is a linear contract whereby the margin is stored in USDT stablecoin. On the flip side, a coin margined perpetual swap stores the margin in the selected cryptocurrency, for example, Bitcoin, Ethereum, and XRP. In comparison to coin margined swaps, USDT margined swaps are better for the following reasons. First, allows a simpler and more direct calculation of the profit and loss from a perpetual swap contract. Unlike the coin margined swaps, USDT margined perpetual swaps P&L can be shown on a linear curve and is clear at a glance in USDT. Secondly, in inverse coin margined perpetual swaps, the margin is based on the underlying cryptocurrency, such as BTC, which are very volatile in comparison with USDT. USDT margined perpetual swaps uses stablecoin as margin, and thus, traders do not have to hedge their position to avoid the risk of holding the cryptocurrency. Huobi Futures announced the launch of the USDT margined swaps in mid-October, allowing you to bet on the future price of crypto assets. Trading USDT margined perpetual swaps enables you to long or short an asset if you think the price is going up or down respectively. The USDT margin swaps are settled every 8 hours, and the realized P&L and unrealized P&L will be transferred to the user's account balance after the settlement. USDT margin perpetual swaps offer you 1x to 125x leverage on your trades, allowing you to trade up to 125 times the amount in your account. However, remember, higher leverage puts you at a higher risk of being liquidated. Trade leverage positions with caution. Currently, Huobi offers more than 55 trading pairs on its USDT margin swaps and keeps growing. After learning the intricacies of Huobi's USDT margin perpetual swaps, in this section, we explain a step-by-step guide on how to trade these stablecoin margin positions. Before starting your journey in USDT margin swaps trading, you need to have a registered and verified account on Huobi Futures. On the official Huobi Exchange website, go to the sign-up page. Enter your details on the resulting page, including email or phone number, nationality, name, and password. Agree to the user agreement. Click Sign Up. Once signed up, you will have to complete the ID verification requiring you to input your names, a government-issued passport, driving license, or ID number, and upload a picture of it. Then visit futures.huobi.fm and click USDT margin swaps. Log into your Huobi account and open USDT margin swap. Security measures. Allows enabling two-factor authentication, 2FA, for additional security. Huobi also implements additional security measures such as email verification, a designated fund password to ensure fiat asset security, and phone verification. 2. How to deposit USDT funds to your account. Log into your Huobi trading account. On the top right-hand side, click on Balances and select the USDT token. Check your USDT deposit address and send USDT to this address. You may choose to copy the deposit address or scan the QR code. Once copied, head over to your USDT-filled wallet and withdraw to this copied address. Note: USDT has multiple chains that support it, including Omni, ERC20, and TRC20. Be careful to select the correct blockchain before transferring your tokens. 3. Transferring USDT from spot wallet to derivatives wallet. Once you deposit USDT to your exchange account, the next step is to transfer the tokens to your derivatives account. Go to the Balances tab. Choose Derivatives account. Choose swaps that you want to trade and select the transfer option. Click Transfer, select Transfer from exchange account to derivatives account and enter the amount you wish to transfer. Click Confirm to transfer the asset. How to start trading on Huobi's USDT margin swaps. Before starting off on how to open your USDT margin swaps positions, you need to understand some key terms. Funding rate. This is the fee paid between buyers and sellers at settlement after every 8 hours. If the rate is negative, the shorts have to pay the longs, and if positive, the longs will pay the shorts. Position margin. This is the amount of margin that is allocated to all your open positions. It is calculated as the entry value of all the contracts you hold, divided by the selected leverage, plus unrealized profit and loss. Order margin. The minimum amount of equity required to retain your open orders. It is calculated as the value of all open orders divided by the selected leverage. Liquidation. Margin ratio is an indicator to estimate the risk of users' assets. When the margin ratio less than or equal to 0, forced liquidation will be triggered. It is recommended that you pay close attention to changes in margin ratio to avoid liquidation of its positions. On the top bar, click on Derivatives and select USDT margin swaps. On the resulting trading page, select the cryptocurrency you wish to trade. Place an order by selecting the type of order and filling in the price and quantity wished. Limit order specifies the highest price you wish to buy an asset and the lowest price you are willing to sell a specific asset. Trigger order. This order allows you to set a trigger price, order price and quantity in advance. When the latest price reaches the trigger price, the system will place an order by using the price and quantity set in advance, just like limit order. Isolated margin. The account equity for each swaps is calculated separately, and the occupied margin, P&L and margin ratio of each swaps will not affect each other. Cross-margin mode. All swaps under the cross-margin mode share the USDT in the cross-margin account as the margin, which indicates that all positions under the cross-margin mode share the same account equity, and their P&L, occupied margin and margin ratio are calculated jointly. Fill the price and quantity wished. Select leverage and choose how much do you want. Open long if you think price will go up. Open short if you think the price will go down. Conclusion. As seen above, trading USDT margin perpetual swaps have their advantages over coin margin swaps. Volatility risk is done away with while offering a direct and simple linear method to calculate profits. Huobi is a pioneer in USDT margin trades, offering you a cheap and direct platform to complete your stablecoin derivatives trades.